last thing to talk about here in terms of the topics, we're going to look at the inflation report, shows continued progress. The PCE, which is what the Federal Reserve really likes to look at here in terms of inflation, actually showed an annual increase of just 2.1%, while core PCE, which excludes food and energy, showed a gain of 2.5%. Both results were 0.1% below their respective estimates. And the big thing here is we've moved, I'm going to say, quite close to the Fed's target now of about 2%.
And one thing that a lot of people have trouble understanding with this is, we're getting closer to that number, but that doesn't mean prices have gone down. It just means the rate at which prices are increasing has slowed. So people are like, oh, I used to be able to buy this and, it was so cheap. When is that going to happen again? Well, it's never going to happen again. But
deflation is bad for the economy.
That's not going to happen. That's not what we necessarily want. That's also, again, why you don't want to have all your money in dollars, because with inflation, dollars are the only thing that's really losing value. Everything else is appreciating with it.
Yeah. So, we'll kind of see what happens here with inflation, because obviously April, this is what the PCE number was for. That was kind of the beginning of tariffs, right? So, now as we get into May, June, July, that is when you'll actually really, I think, start to see what companies are deciding to do with these tariff rates. And I was kind of interested by this. There's an economist from Pantheon Macroeconomics. He said he believed that the core PCE would peak later this year between 3 and 3.5% if the current mix of tariffs remained in place. And I continue to believe it's going to be difficult to actually really estimate the impact of tariffs, because there are so many intricacies within the supply chain. We've talked a lot about that on the show. So I'm almost like, I don't even want to try and forecast it, because it's going to be so complicated in terms of what that will be. I do think it's not going to be as bad as some people worry about. I saw this and it just drives me crazy. The University of Michigan Consumer Sentiment survey said the 1-year inflation rate now by people in the survey, 6.6%. I don't see that happening. This guy, I think the 3.5%, I think that's definitely very possible. But even with a PCE around 3%, I don't see that as being a bad thing for the economy.
Well, I think, it's impossible to predict what's going to happen with tariffs. It's happening. There's changes every single day depending on what the administration is doing and what different courts are doing and judges are doing, what other countries are doing. So there's constant change in that. And then we really don't know how long that's going to go on. So the raise in the PCE or the raise of inflation, I think, has a big influence on how long these tariffs last, which I don't think anybody intends them, including President Trump, for these tariffs to be a perpetual thing. It's more of a bargaining chip.
I don't know. It seems almost like that 10% baseline, he's kind of intrigued as having that on as a permanent tax. We'll see. I don't know.
He changes his mind all the time.
He does. So. And again, he always says it's the art of the deal, the negotiation tactic. You don't really want other people to know what your ultimate plan is.
Right.
So, we'll have to see. But if it even stayed on as a 10% level, I don't think that's going to cause big problems in inflation. I still am looking for the Federal Reserve to maybe cut rates maybe 2 times this year, and then maybe cutting rates even further next year, because I don't think this is going to cause ongoing inflation, and we can continue to push towards that 2% level perhaps next year, which should allow us to lower interest rates, which I think would be, of course, good for the economy long term.
Yeah. And I think as far as those interest rates cut, if that does happen, if we see 2 cuts, for example, I think that's definitely going to be in the later part of the year, because the Fed has just said, we want to look at the data, we want to see what happens. So Powell is, he definitely doesn't want to get ahead of anything.